Hello everyone, welcome back to this week's Technical Insights. US stock market fell last Friday with the S&P 500 giving up its weekly gain after investors were worried that the reciprocal tariffs planned by President Donald Trump will reignite a global trade war. The Dow Jones Industrial Average fell 444 points or 0.99% to close at 43,303 points. The S&P 500 declined 0.95% to close at 6,025 points. Nasdaq Composite Index also tumbled 1.36% to close at 19,523 points. Friday losses left all three major US indices into negative territory on the week. Donald Trump said that he will be announcing next week reciprocal tariff so that the US will be treated evenly with other countries during a meeting with the visiting Japanese Prime Minister. He will also have a new conference and he will lay it out pretty simple. The S&P 500 then snapped a 3-day winning streak during the week and ended the week much lower, logging back-to-back weekly losses. Investors will need to brace for trade war escalation in the coming weeks as Donald Trump would reveal plans for reciprocal tariffs and there could be more retaliation moving forward. Wall Street's so-called fear gauge, the VIX index, climbed 6.7% on Friday as details of the looming tariffs remain uncertain. It wouldn't be a surprise to see the VIX remain elevated until this tariff situation played out. For the week, the Dow Jones Index fell 0.54%, its first losing week in 4, and the broad index S&P 500 dropped 0.24% for its second losing week. Tech-heavy Nasdaq Composite lost 0.53%, also its second losing week in a row. In Asia, Hong Kong stock posted back-to-back gains on Friday with the Hang Seng Index rising to the highest level in almost 4 months as technology firms rallied amid the enthusiasm related to DeepSeek. The Hang Seng Index surged 1.16% or 241 points on Friday to end at 21,133 points. This is the best finish since October 2024. The Hang Seng Tech Index also added 1.8% or 90 points to finish at 5,150 points. Investors continue to show interest in Hong Kong tech stocks amid the AI hype, with Lenovo Group and Xiaomi soaring 6% and 5% respectively. The Hang Seng Index soared 4.5% last week to log its best performance in 4 months, while the Hang Seng Tech Index also surged 9% for the same period. DeepSeek is a re-rating catalyst and its development has attracted the attention of global markets. It reconfirmed China's continued ability to innovate in the AI developments. Back in Singapore, our STI index was looking strong last Friday, up 31 points or 0.81% amid the global market volatility. The STI finished at 3,861 points, within 1% of the 8 January high at 3,886 points, and also its all-time high of 3,906 points that we saw in October 2007. ST Engineering made an all-time high above $5 last week. The stock added 3.3% on Friday and booked the highest net institutional inflow this year after Singtel and UOB. ST Engineering announced the group secured about 4.3 billion Sing dollars worth of new contract in fourth quarter 2024. This added to the 8.3 billion Sing dollars of new contract in the first 9 months of FY24, and based on the order book as at September 30th, bringing the total order book size to about 28 billion. ST Engineering reports its FY24 results before the market opened on 27th of February. SGX was actually the biggest winner on Friday as their shares hit the highest intraday level in 17 years amid a rosy outlook for the exchange. The stock was up 10% to $13.99, and analysts expect SGX to continue to benefit from the market volatility stemming from global uncertainties due to the tariff war. SGX's first half after-tax profit of fiscal 2025 came in ahead of expectations due to stronger cash equities and derivative demands. These conditions are expected to continue as global geopolitical volatility and fiscal uncertainty rises. This should give SGX a competitive advantage as a deeply liquid risk management venue. Singapore standing as a flight to safety venue in Asia could also boost SGX volume this year. Investors may also have raced ahead to price in a potential pickup in trading volume on expected initiatives to revitalize the Singapore stock market. For the trading week, the STI is up about 0.15%, adding to the 1.36% that we saw last week. And for this week's technical analysis, let's look at the top gainer on the STI last Friday, SGX Group. Last Friday, SGX share price rose $1.28 or 10.07% to close at $13.99. This is SGX highest closing since 2007. From the chart, we can see that SGX share price was largely flat in the first half of 2024, but in the second half, it started to break out into an uptrend for the second half of last year. The SGX share price hit a high of $13.09 in August, the period over here, and then retested this level again in the December period, forming a double top formation. With the SGX share price now firmly above this level of $13.09 and also above the upper bound of the Bollinger Band at $13.17, this level of $13.09 could have a change in polarity from a resistance level to a new support level going forward. The next support level for SGX will be the blue line that you see here, which is the 50 days moving average, now at the $12.47 level, with the 100 days moving average in amber now at $12.02. Having hit a more than a decade high, the next resistance level could be the next psychological level at the $15 or the $16 level. On the indicators, we can see that the MACD indicator is showing a huge positive reading, indicating that the uptrend will continue for the mid to long term. The latest RSI reading was at 80 last Friday and has crossed the 70-point overbought level, indicating we may see a technical pullback on SGX share price. The previous time the RSI hit the 80 points level was somewhere in the September of 2024 period, after which SGX share price actually has a slight technical pullback and went into a consolidation mode for 2 months until November. So with the RSI in the overbought region right now, it would not be wise for investors to chase the share price in case we see a technical pullback or the share price move into consolidation mode again. Investors should at least wait for a pullback to the $13.09 level, which could be a resistance turn support level before accumulating on SGX share price again. On the longer term, out of 13 analysts covering SGX share price, 3 had a strong buy call, while 4 also have a buy call, with 5 hold calls and 3 strong sell. 12-month average target price among them is $13.12, with the maximum estimate at $15.54 and the minimum estimate is at $10.80. And these are the updates that I have for you this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.